Breaking news here on Squawk Box. Secretary-General, welcome to the program. It's great to see you.
Thank you, Dan. Thank you very much.
So the seminar is now in its 9th year. Just walk me through the significance of this event, and for international viewers watching what's happening here today in Vienna, what do they need to know?
Well, first of all, it's great to have CNBC with us as a media partner covering this event. We have 24 media partners, including yourselves, covering this global event. I said yesterday in my remarks, I think there's no energy industry event in the world that gathers almost 25 ministers, petroleum and energy ministers from all around the world, CEOs, heads of international organizations from diverse facets and diverse parts of the whole industry. And we're not talking just about petroleum here. This is the beauty of this seminar, because we look at energy as interconnected and interrelated. So we're really happy to have such a big audience, almost 1,000 delegates registered. And indeed, the seminar dates back to 1969. So it started way back 56 years ago. We're proud that we're in its 9th edition now, growing stronger year on year.
I want to know how you're reading the structure of this market today. We've just seen OPEC moving to add additional barrels, building out the supply. Why is that justified?
Well, first of all, it's not OPEC, as we say, to be exactly and particular in the terminology. It's a group of 8 countries that are within the wider OPEC Plus group, some of them being non-OPEC members. So just to clarify that, because I see that a lot in the media, OPEC Plus is bringing back or OPEC is bringing back. But to your question, absolutely. I mean, we're in the middle of Q3. We do see signs of strong demand. Yes, despite some of the noise and the turbulences we hear about, talks about tariffs or potential trade wars or economic slowdown, we don't see that. We see strong global economic growth. In our forecast, we read this year's growth at 2.9% still. And I always say we have to differentiate between the noise versus the facts on the ground. The facts on the ground for us is what matters. We see strong demand in the Middle East, in China, aviation sector booming, in India and many places of the world. We're in the middle of Q3, which is the peak gasoline driving season demand in the US. Gasoline demand picks up. We're in the middle of the peak of Q3 where refining runs around the world go to their highest levels. So I think this justifies our outlook that we see global demand growth this year at 1.3 million barrels per day growth.
And OPEC's World Oil Outlook is one of the most closely watched publications in the entire energy industry. It's coming out in just a short while. Can you give me some insight into what it is going to tell us about the long-run outlook for demand?
Well, we're happy to launch the Outlook this year, the 2025 edition, which takes us out to the future, which basically to 2050. This year, we are going to, I cannot tell you the details yet, we're going to launch it in a couple of hours, but I think it will be reflecting a lot of the realities on the ground again. We have seen a lot of U-turns, if I may call it U-turns, a lot of changes in policies around the world where demand for traditional sources of energy has come back. I think there's pragmatism in policy making more around the world today about the future of energy and the energy mix going to how it will be evolving in the future. This is mostly being reflected in the way we will be presenting our outlook in about 2 hours' time. And we will be showing that energy demand will be increasing, driven by growth in non-OECD population growth. The world population is going to rise to almost 10 billion by 2050, most of that in the developing world. We have always said we have to do something in order to be able to help the world to get rid of energy poverty. We still have so many people around the world lacking access to clean cooking fuels, to basic electricity like we all enjoy and we take for granted. In addition to that, the size of the global economy is expected to double from now to 2050. All of that put together, we're going to reflect it in the way we will show that there will be significant increase in primary energy demand growth. Oil will retain its share still at 30%. Gas demand will be rising. Renewables, yes, they will be rising, but starting from a lower base. And we're going to reflect all of that, and hopefully you'll be covering the launch of our World Oil Outlook in a bit.
His Royal Highness Prince Abdulaziz also spoke quite passionately yesterday about the state of the energy transition. The concluding line was that we could potentially be sleepwalking into another crisis if we don't see additional energy being supplied globally to meet rising demand. What role can OPEC play in providing that supply? And is it reasonable to expect that we will see more oil coming to the global markets in the future as a result of the demand that you're talking about?
Well, OPEC has always been advocating for additional investments. I've been very vocal. His Royal Highness, as you mentioned, many, if not all of our ministers have been talking about the importance of not sleepwalking into an energy crisis because, as I just highlighted, several factors only lead to one direction. The world's going to need more energy and it's going to need all sources of energy. So we're going to show in our World Oil Outlook as well how we will need to invest in petroleum. We've always been calling for additional investments in upstream, in downstream, in midstream, petrochemicals. It does not make sense that the world does not invest in all sources of energy. We're going to need to invest in technologies to deal with the emissions and reducing the emissions. So that is one thing that OPEC can definitely push for and continue to push for. But we need the rest of the stakeholders in the energy to come to realize that we need to be pragmatic and not to be selective in what energy sources we should invest in, as some have been in the past. OPEC has been advocating for investments in all energies and not just for petroleum, because we know that the world will need oil, gas, renewables, coal still continues to grow. So it's about, yes, there is demand. We have to acknowledge that there's going to be demand. The numbers are clear, they speak for themselves. Year on year, oil demand has been setting new records. Contrary to what some others have been saying, that it's going to peak, it's going to plateau. So I think His Royal Highness, OPEC Secretariat, our ministers are very clear in that direction. The world will need to invest more and more. And the numbers I will not disclose now, but they will be disclosed in our launch of our WU in a little while.
Secretary General, I have to ask you about the geopolitics as well. One of OPEC's most important members has just been involved in a 12-day conflict with Israel. What have we learnt from that experience, and is the region safer today as a result?
Well, I cannot say that the region is safer. First of all, I want to say that we do not want to have any of our member countries under any sort of attack or military aggression. Our member countries, all of them, are very important and vital suppliers of energy to the whole world. And therefore, energy stability is required, energy security is required for the world. I am not going to say that the region is stable or not stable. This is not my job, but it's for the politicians to determine. From our side at OPEC, we continue to advocate for the importance of having stable supplies of oil to the world, providing what the world needs without interruption.
Were you surprised at how markets responded to that crisis?
Well, markets today are influenced by so many different factors. I mean, there's a lot at stake going on, many different factors that get involved and are intertwined. So some may be surprised, some may not be surprised. I think the reaction was relatively normal to expect a jump in prices, which is what happened, and then a moderation, slowdown. But I think the ultimate factor is what we always say: geopolitical events may cause a certain surge or a big drop in prices, but ultimately what really governs the levels that the market is at is really the fundamentals.
One of the other key concerns in the market right now is the fact that the US president is also threatening sanctions on the top buyers of oil, including China and India, for purchasing oil from Russia. What's your reaction to that?
Well, I mean, Russia is a global provider of energy to the world, not just oil. I mean, 10% of global oil supplies come from Russia. It's important to have uninterrupted supplies, again, from all sources of energy to the world, whether it's oil or gas. I think it's important also to remember that demand is growing, as we have shown, and therefore this smooth flow, uninterrupted flow of supplies from the world has to continue.
How concerned are you about those potential US sanctions, though, particularly on top buyers like China and India? These are key demand drivers into the future. What happens if the US moves ahead with that type of plan?
Well, there's a lot of talk happening, but we don't usually comment on specific sanctions or on specific political events. I think for us the most important thing is OPEC's message, is that really the world must continue to receive what it requires in terms of supplies of oil, of course gas and energy.
When ministers get together, either in person or on Zoom calls, as we know often takes place, or even inside the WhatsApp groups, what would you say is the primary concern that you're hearing from members right now about the outlook and about this current geopolitical situation?
Well, I think always, as I said, we look at the fundamentals. Really, the ministers, they focus on the numbers. They want to see the demand forecast, the economic growth forecast. I assure you that none of them talk about a certain price level or a certain issue or a political event. I think the primary thing that has kept OPEC so strong for so many years, and this year we're going to be celebrating our 65th anniversary, is the fact that we do focus on the core fundamentals in the market, really. There's always noise, whether it's geopolitics, whether it's a trade issue, whether it's sanctions here or sanctions there. That's, something that we have gotten used to. As long as we continue to focus on the supply-demand fundamentals that are driving the market, ultimately driving what the consumers want and what the producers can supply, I think this is the important thing, and that's what the ministers focus on.
Final question here. Of course, the big debate in the market right now is what is going to happen to balances in Q4, and the question of whether or not we're going to see additional supply coming from the OPEC group. As you gaze into your crystal ball, is it realistic to expect that we will see more barrels coming back in the coming months?
Well, to be honest, Dan, I cannot preempt what the decision will be from the ministers, but I can tell you the following. We have, as I said, a strong and robust demand growth outlook for this year at 1.3 million barrels a day. Yes, some may say it's higher than the consensus, but then I say to that, well, the consensus has been on the lower side because many have adjusted upward their demand forecast. Also, I can say that many have forecasted that this year we will be seeing a glut in the market. People are now realizing that there is no glut. So I think this takes me back very clearly to the fact that we do focus on fundamentals. We have sound analysis. We don't jump or have a knee-jerk reaction to a headline that may come out of here or there. And we really focus on the numbers. I have a group of 60 analysts in the research division in OPEC. I'm really proud of the work they've been doing, all the data they've been supplying to our ministers. That enables them to take these sound decisions to stabilize and make the market balanced.
So no $50 oil?
I'm not going to get into numbers there.
All right, Secretary General, we'll leave it there. Thank you so much for being so generous with your time. I know it's a very, very busy couple of days on the grounds here in Vienna, so thank you so much again for joining us live on Squawk Box.
Thank you, Dan. Thank you, CNBC.